trying to go live when you're new to it. So I'm Heather Matthias with EXP here in Spokane Valley. If you haven't met me before, hopefully these will become a weekly thing. And as I get better at it, we won't have little hiccups in the beginning. So today I'm going to talk to you a little bit about, just for a few minutes, about kind of some of the housing news, some of our market stats, and just talk to you about what's going on in the housing market that you need to know. All right, so let's get to it. We're going to share our stats, which are here. Okay. So hopefully you can see the screen. So we're looking at the closed sales in April from 2023, just the residential homes. I don't include condos. And these are going to let you know. So on this column, we have year over year, and on this column, it's compared to the last month. So our median home price is actually up from last month, which is kind of encouraging depending on your perspective. It's up almost 4% to 425,000, and it's honestly not down that much year over year. So the part that is unfortunately alarming is we've got our closed sales are down to 391 in April, which is 15% below what we had in March, and then almost 32% year over year. This is going to be because of the interest rates. People are kind of reluctant to even put their homes on the market, which you can see also this new listing stat, which I want you to pay attention to. We're up month over month because we have a seasonal market. We tend to sell most of our homes in May, June, and July. I mean, we sell them all year, but compared to like November, December, January, we sell a lot in the spring and summer, early summer. So it's expected that our inventory would go up, but we're still down 13% on listings year over year, and it was tight before. And then our median days on market is kind of staying the same. Homes are moving anecdotally, depending on the price point and the quality of your home. You can sometimes expect to get multiple offers. And the reality is for buyers, there just isn't a lot to pick from. You got to be pretty flexible and or creative when you're looking for your home. All right, so that's it for the housing news. Now let's just take a quick look at the interest rates. Let's see, do I do this? Oh, that works. Yeah, so the interest rates are hanging in there at about 6.5%. The 15-year is just under 6%. And interestingly, so the consumer price index came down. That's been in the news quite a bit about inflation, and it's down at 4.9, I believe it was, and it's a little bit under, it's under 5%. The Fed indicated that they may put a pause on interest rate hikes. And whether it's because of just the seasonal shift in buyer demand or because of what the Fed says about potentially pausing the interest rate hikes, there was a 5% increase in mortgage applications. So we're still down on mortgage applications, 32% from last year, because just people have been priced out of the market kind of across the board, certainly here in Spokane, but nationwide. On the national housing front, the National Association of Realtors is holding their legislative meetings this week, and Lawrence Yun, the chief economist for the NAR, did some forecasting, and he's forecasting that interest rates are going to hang in there at about 6% at the end of the year. He's expecting us to, after this kind of tough year of tight inventory and higher rates, he's expecting 2024 to be a little bit better. As mortgage rates stabilize and consumers kind of adjust to this new price, and hopefully inflation has come down, he's expecting for next year to be a better year in terms of quantity of homes, new and existing homes being sold. Robert Dietz, the really only solution that we keep coming back to is we need more supply. Interest rates don't change in a meaningful way the supply. They might even reduce the supply because it becomes harder to build with less cash available to builders. And that's something that Lawrence Yun said as well. What we really need to do to make an impact on the housing crisis is build more houses. So at that same conference, Robert Dietz, who's the chief economist for the National Association of Home Builders, he said that the biggest obstacle to builders building more entry level housing are regulatory fees. And I can see, he said, it's like $200,000 before you even put a shovel in the ground going out to the government. I don't know how accurate that statement is. I don't know. But I do wish we had a little bit more transparency from this industry, because it's not clear to me how much their margins have been impacted by the supply shortages that we're having in terms of housing. The high demand has inflated prices so much, like 60% in some areas of the country, certainly 50% here in Spokane at the height of the pandemic. Um, and when I pulled up, like, DR Horton is our hugest builder, the biggest builder in the country. Their stock price is up. Their profit margins in 2016 were right around 7%. And now over the last 12 months, they're up at 16%. So whether or not this is a negative thing and that the regulatory fees are really what we need to be targeting, is hard to say. Certainly the government can do things to incentivize building that entry level housing. So we'll see what happens. Another interesting thing that happened this week is the Federal Housing Finance Agency, the FHFA, um, rescinded their controversial debt to income ratio tiered fee structure that was kind of circulating in the news and in social media. They just were like, kind of, oops, our bad. Maybe we should have asked you guys before we did this. And so they put out a request for information for the rest of the fees that they're planning on changing, to kind of gauge the community response before they just make a big policy change or fee change. So in the market that I'm shopping in right now, the short-term rental market, Redfin put out an article about a month ago, kind of tracking that second vacation home sale mortgages and short-term rental mortgages are way down. Year over year, they're down about 49%. And that's to be expected with the higher interest rate and the kind of gloomy economic outlook we have with the pending recession. Second homes are kind of a luxury purchase, so it's not surprising that those would be down. There is a question about whether the short-term rental market has been oversaturated. Airbnb stock is down because they're not quite meeting expectation. VRBO, I mean, it's hard to tell because it's Expedia is all bundled together, but their stock's up. And that could just be due to some competition. But I did want to let you guys know, if this is an asset that you're considering investing in, I'm going to link to it in the notes below. But there's a really cool tool. It's called AirDNA, and it's specifically for buying short-term rentals. And it'll let you know occupancy rates, kind of buyer demand, how much to price something at. It'll really help you walk through the metrics of whether this particular vacation rental that you're considering is a good idea, whether, this is an area where you should be doing it or not. I also will link to a guide I created as I've been going through this process myself with my husband, to kind of help you put together a business template and some questions that a business plan, and some questions that you can ask yourself about whether or not this is a good idea. So that will be linked to in the description below. I also had a really great experience. I got to meet with Spencer Gardner, the Spokane city planner, last week, the week before, just for a few minutes. And I kind of just wanted to get his idea on what he thinks the obstacles are to solving the housing crisis locally. And he had some good insights into, even as we, have made some smart policy changes to start to incentivize the different kinds of housing types that we need to be building, those things take quite a while to make their way into the market because we haven't built these other types of housing for so long. Both the builders and the consumers don't really know kind of how to navigate this new world. So even though theoretically, you could build a duplex in town and it'll be a lot easier. No one really has done it before. So I also had a nice conversation with Dean Gunderson from the Department of Planning, and they are working on something that'll hopefully be announced in the next couple months to address this specific issue, to just kind of make it really clear on how a buyer and their builder can kind of walk through this and create these other types of housing, a fourplex, a duplex, or a set of townhomes. So that's all the news I have for you guys this week. As always, don't hesitate to reach out to me if you have any questions about the housing market, and I will include some links. I'll actually just link to my blog post that I wrote, my longer blog post that has a little bit more detail and all the links you could possibly want. All right, I'll talk to you guys soon.